Okay, today we're going to discuss the best self-directed 401k for both traditional investments as well as alternative investments. As always, you can join the conversation on our community, mysolo401k.net/my community. We also go live twice a day here at 10 a.m. Pacific time and a second time at 1 p.m. Pacific time. Today's presentation and Q&A session is for educational purposes. We're not going to be providing investment advice or tax advice on today's webinar. Also, we will be going over the mega backdoor here at 1 p.m. Pacific time for making contributions when your business is taxed as a partnership. So make sure to join us at that time. Let me share my screen here and we'll get started. Also, feel free to shoot over your questions here on the live stream. You can type in your question and we'll go ahead and answer those. Okay, let me blow this window up a little bit here. Okay, so the self-directed 401k, let's do a quick overview before we start talking about investment types. Some of the key features of the self-directed 401k is that it allows for high contribution amounts, much higher than an IRA, for instance. Of course, you can make alternative investments such as real estate, private syndicates, precious metals, cryptocurrency, promissory notes, tax liens, and much more. The self-directed 401k also allows for participant loans, whereas it's prohibited to borrow from an IRA. If you borrow from an IRA, it's considered a distribution. You can borrow 50% of your self-directed 401k balance, not to exceed 50,000. For example, let's say you have a self-directed 401k and you want to borrow $50,000. You would be able to borrow the full $50,000 since you have at least 100,000 value 401k. We would prepare those loan documents. You would pay the loan back quarterly or monthly. It's fixed payments over a 5-year period. The loan can be extended to a 15 or 30-year period if it's used towards the purchase of a primary residence. You can also use those borrowed funds from the 401k when you do it through a 401k participant loan for investing outside the plan. So some clients will borrow from their 401k and place investments outside the plan. So it would be a personal investment at that time. The self-directed 401k is very flexible. That's why it's great for making alternative investments as well as equities. Flexible from a contribution perspective, specifically in that you can make pre-tax contributions, Roth contributions, voluntary after-tax contributions. You can choose to solely make voluntary after-tax contributions if you want, or you can do a combination of Roth, voluntary after-tax, and pre-tax. Let's talk about the eligibility requirements for a self-directed 401k, because of course, before you can start investing with the 401k, you need to make sure that you qualify. So then you can open a solo 401k plan. So from a qualification perspective, a self-directed 401k is for the self-employed. And the business cannot employ any full-time W-2 employees, meaning a W-2 employee who's not an owner in the business, who works 1,000 hours or more. If that's the case, you would not be able to open a solo 401k, aka self-directed 401k. You also need to have active self-employment income in order to open a solo 401k. Therefore, for example, if you have investment income, that would not qualify. It's got to be earned income. One way to identify earned income is income that's subject to Social Security taxes. Your spouse can also participate in the plan if he or she is also working in the business. Here's an example of a two-participant plan. Let's say, for example, that you and your spouse are both working in an LLC, and you both participate in the plan. The self-directed 401k would be sponsored by that LLC. Both spouses would be participants in the plan. So one plan, two participants. You see here 3 separate brokerage accounts for each participant. So for a 2-participant plan, it would be a total of 6 holding accounts, aka bank or brokerage accounts, to hold each spouse's respective pre-tax 401k funds, Roth 401k funds, and voluntary after-tax funds. You're not required to fund these separate buckets right away. The plan is already built, however, to allow for all these contribution types, so you can always utilize it later. Okay, let's keep moving on here. With the self-directed 401k, you can really supercharge your contributions so that you can then use those funds to invest in alternative investments as well as equities. For 2025, for example, the overall contribution limit is $70,000 for someone who's age 49 or younger. If you're age 50 or older, you can contribute even more through a catch-up contribution. As this chart here shows, those who are age 50 or older in 2025 can contribute an additional $7,500 as a catch-up contribution. Therefore, you could contribute a total of $77,500 for 2025, which is a good chunk of money that you can put to use for investing that self-directed 401k and alternative investments like real estate, for instance, or even promissory notes or cryptocurrency or precious metals, to name a few. There's that special super catch-up contribution for 2025 as well, for those who are age 60, 61, 62, or 63, which is $11,250. So the catch-up contribution for someone that falls within that age range would increase from $7,500 to $11,250. The self-directed 401k also allows for the auto contribution feature, where you open a self-directed 401k for tax year 2025, and you're going to qualify for a $500 auto contribution credit deduction on your business tax return for 3 consecutive years for a total of $1,500. So $500 per year for 3 consecutive years. You don't have to contribute to the 401k plan in order to qualify for that auto contribution credit. What is more, existing clients can also have their plan updated to add the auto contribution credit, especially if you signed up with a company like ours prior to December of 2023, as the auto contribution credit really did not become available till the end of 2023. It's a dollar for dollar credit, as I mentioned earlier. As far as investment options under a self-directed 401k, let's go over some of those here. So physical real estate is an option where the 401k invests funds in a property. It takes title to the property. Therefore, the property is owned by the plan. All the income will flow back to the plan. So let's say, for example, you buy a rental property, you rent it out. Let's say you get about $1,000 a month in rent. the rental payment would flow back to the 401k, and it would grow on a tax deferred basis or even tax free basis if it's a Roth 401k. You can also invest in promissory notes. Essentially, here the 401k acts as a bank where the self-directed 401k lends funds to a borrower, someone who's not related to you or yourself. That's a promissory note investment. Don't confuse the promissory note investment with a 401k participant loan. That's different. That's where you borrow from the plan and you pay back the plan, and that's a $50,000 maximum limit. So the promissory note is where the 401k will lend money. Let's say you know a developer in the area who's developing real estate. His company needs funds. You draw up a promissory note. The developer is going to secure that promissory note with some of the properties in that development. And so that way, if the developer defaults in making those promissory note payments, the 401k will be able to go after the property and eventually take title to the property as security for that note. So that's a quick, dirty example of a self-directed 401k promissory note investment. From a precious metals perspective, a lot of clients like to invest their self-directed 401k in precious metals, whether it's bullion, silver, or gold. They do that to protect their retirement plan from inflation. Under that type of investment, the precious metals are purchased through the 401k. The metals are then stored in a safety deposit box in the name of the self-directed 401k. In other words, you can't store those metals at your home or business. They have to be held with an approved depository taking institution such as your local bank or credit union in a safety deposit box solely for holding those metals, not your personal investments. And of course, another example of an alternative investment allowed in the self-directed 401k are private placements like real estate syndicates. Under that type of arrangement, the 401k is listed as an investor. Any funds that are paid will go back to that self-directed 401k as well. The self-directed 401k can also invest in cryptocurrency. You would need to open up a bank account in the name of the self-directed 401k at your local bank. The exchange, the cryptocurrency account at the exchange would also need to be titled in the name of the self-directed 401k and then linked to that self-directed 401k so that the investments flow from the self-directed 401k bank account to that cryptocurrency account at the exchange, also titled in the name of the self-directed 401k. Again, we talked earlier about participant loans where you can borrow, you as the participant can borrow 50% of the solo 401k balance, not to exceed 50,000. The example I used before is the $100,000 example where you need at least 100,000 value self-directed 401k and then you can borrow 50,000. Another example is if you have $80,000 in that self-directed 401k, you would only be able to borrow 40,000. So 50,000 is the maximum, or 50% of the total balance, not to exceed 50,000. Now, by consolidating retirement accounts into the self-directed 401k, you're going to have more funds to invest the self-directed 401k in alternative investments such as real estate, notes, and cryptocurrency, to name a few as we touched on earlier. So that's what makes the self-directed 401k the best self-directed type of plan for investing in both equities and alternative investments, is that you can also consolidate other retirement funds like IRAs, former employer plans, 457 governmental plans, thrift savings plans, 403b plans, pensions, defined benefit plans. Those can all be transferred to the self-directed 401k. So now you have more funds to invest in alternative investments as well as equities. Another great thing about the self-directed 401k for investing in alternative investments is that if you invest in real estate, and you utilize debt financing, so a non-recourse loan, that's where the self-directed 401k obtains a loan from a bank or a hard money lender. The loan is to the self-directed 401k, and then it's used for investing in real estate, for purchasing a property in the name of the plan. That loan, the non-recourse loan, is paid back by the self-directed 401k. But what makes the self-directed 401k the top choice for investing in alternative investments, especially real estate, is that if it utilizes the non-recourse loan, it's not going to subject the self-directed 401k to unrelated debt finance income tax. That type of tax does apply to self-directed IRAs, but not self-directed 401ks. So that's a big advantage. The self-directed 401k is also great for conversions. Let's say you have a large pre-tax balance in your self-directed 401k. You can convert those pre-tax funds to the Roth self-directed 401k. So now you can invest tax-free in real estate. Also, you can do the mega backdoor Roth strategy with the self-directed 401k. Let's talk about that mega backdoor self-directed 401k strategy. Let me pull up some notes on that one here. So with the self-directed 401k, you can utilize the mega backdoor Roth strategy. That's where you make a voluntary after-tax contribution to the voluntary after-tax bucket of the 401k. So this bucket right here. And you can contribute a full overall limit for the year, which is $70,000 for tax year 2025, and then immediately convert it to the Roth 401k. That's why it's called a mega backdoor Roth, because you make a large voluntary after-tax contribution and then convert it to the Roth. And then you're going to have $70,000 in Roth 401k funds that you can then invest in alternative investments. Here's some more information on the mega backdoor strategy. So once you open a self-directed 401k, we then help you open up a bank account at the local bank or even a brokerage account at Fidelity that allows for the mega backdoor through our plan. You'll make that voluntary after-tax contribution into that voluntary after-tax 401k bucket. It then gets moved to the self-directed Roth 401k as an internal conversion. Then you complete our online conversion form so that we collect the necessary information to issue the Form 1099-R, and then we issue the Form 1099-R. Okay, let's talk about some prohibited transactions with the self-directed 401k, because when you're investing in alternative investments, you want to make sure that you're not violating the prohibited transaction regulations. But let's first talk about disqualified investments. So types of investments that may not be invested through a self-directed 401k are works of art, rugs, antiques, stamps, gems, alcoholic beverages, certain types of coins. A disqualified person in the context of a self-directed 401k, especially when investing in, let's say, real estate, is that you need to know who the disqualified persons are. So your spouse is a disqualified person, your parents, your children, and of course, your spouse. This means that, let's give you an example of real estate. Let's say you want to buy an investment property under the self-directed 401k. Let's further assume that that property is currently owned by your parents. Well, you would not be able to have the self-directed 401k purchase that property from your parents because they are considered disqualified persons. And therefore, it would be prohibited for the self-directed 401k to buy a property that's owned by your parents. Let's do another example. Let's say you have your own business, your business owns a property. Your self-directed 401k cannot buy that property from your business, as your business is considered a disqualified party. Therefore, if that were to happen, it would result in a prohibited transaction. Again, the self-directed 401k can also invest in traditional investments, whether it's equities like stocks, index funds, exchange traded funds. It can even be bonds, CDs, treasury bills. Okay, as far as other items to cover here, we're going to talk about a couple more items and then we'll take a look at some of your questions here. So when you open a self-directed 401k from my solo 401k financial, we'll provide ongoing compliance support, provided that you timely request that type of compliance support, because keep in mind, we don't have access to your funds. So if you need us to assist in doing compliance reporting, specifically Form 5500 Easy or Form 1099R or both, you need to communicate with us because we don't have access to your funds. And we'll include this type of preparation for those who timely requested it at no additional charge. For example, Form 1099R reporting applies when you take a distribution from the 401k or you process a conversion. For instance, if you make a voluntary after-tax 401k contribution as part of the mega backdoor and then convert it to the Roth 401k or to a Roth IRA, that's not going to be taxable necessarily if there are no gains, but it is going to be reportable to the government. So you need to make sure you let us know when you do that on a timely basis so that we can issue that 1099R. Same thing with Form 5500 Easy. That form applies once the balance of your self-directed 401k, including all investments and all participants' funds in the plan, if the market value is greater than 250,000 as of the end of the year for a plan year plan, then a Form 5500 Easy is due by July 31st of the following year. So make sure that you communicate to us so that we can help you prepare that Form 5500 Easy. Okay, let's take a look at some questions here. All right, we've got a question here from Walker. Could you walk me through the process of making a contribution to Fidelity in the voluntary after-tax account? Okay, no problem. Let me pull up an example as well. I'm going to share my screen again here. So I'm going to do a search on our website here. We have a nice little search box here at the top. I'm going to search for Fidelity after tax. Okay, here's the first link here. Okay, here's the one we want, making the solo 401k voluntary after-tax contribution to Fidelity Investments non-prototype investment-only brokerage account. So by way of background, Fidelity refers to their brokerage accounts as investment-only non-prototype brokerage accounts, which are brokerage accounts provided for self-directed 401k plans offered by my solo 401k financial, for example. So one option is you can make the contribution by check. where you would write a check and make it payable in the name of the 401k. In the memo section of the check, you would write voluntary after-tax contribution. And then you would sign the back of the check by writing your name. You would write trustee after you write your name and then list the name of the plan. Then write for deposit only and then mail it. So let's talk about a quicker way of doing it. You can make that contribution via ACH. So here you can actually link your bank account with that Fidelity brokerage account. I'm getting some echo here. Give me a moment here to make sure we're not. Hopefully you can hear me okay. But again, ACH, you would link your business bank account to that Fidelity brokerage account and you would make the contribution electronically. So it would flow from that bank account to that Fidelity brokerage account. We've got instructions here on how to do that. Let's click on this link here. See if I can share this with you. Give me a moment here. When you click on that link, here are the instructions you're going to receive from Fidelity. You're going to enter this information on your bank side. You can also link it from your personal bank account. It doesn't have to be from your business bank account. What matters is that you have the necessary self-employment income to make that contribution. So take a look at these instructions here. It'll ask you to provide your Fidelity brokerage account number, the Fidelity routing number. So this here does a good job of laying out exactly what you need to do to set up that auto deposit from your bank account directly to that voluntary after-tax solo 401k brokerage account at Fidelity. Once you make that contribution, let me share this link with you too so you have it. Once you make that contribution, you then need to convert those funds to the Roth solo 401k brokerage account. And let's talk about that. We have a procedure for that as well. Let me share my screen. Okay, here's the link. How to process a Fidelity investment conversion of voluntary after-tax solo 401k funds to a Roth solo 401k. I'm going to click on that. So here, you would fill out this Fidelity form here, and we have a link to that form. And then you would submit that to Fidelity. You can upload that form to Fidelity. Another option is you can call Fidelity and they can move those funds internally over the phone for you from the voluntary after-tax solo 401k brokerage account to the Roth solo 401k brokerage account. A lot of funds like to use this form here. Once you submit this form to Fidelity, you need to make sure you complete our online conversion form so that we collect the necessary information to issue that Form 1099-R. Let me send over this link as well with the procedure. Okay, let's see if we have some more questions here. Got a question here from Michael. I'm on a tight deadline to transfer my solo 401k funds from Ascensus. Do you complete the Ascensus transfer form docs and submit to Ascensus? I'm on a tight investment deadline. How do I know when you initiate the transfer form? Yes, we prepare the transfer forms for you. To get those forms transferred, we'll need to get your signature, and then we can fax it to a census for you. Let me see if you currently have a solo 401k with us, and I'll make sure to have our accounts team send you an email here. Yeah, here we go. We'll send you an email here this morning and reach out to you exactly how to get that transfer going. But once that form gets submitted to a census.transfer form, the ball is in their court. So it really comes down to how quickly a census will process that transfer. So you're going to be subject to the census timeline. And I know a census likes to drag their feet when they're doing transfers. So you're probably going to want to send a census an email saying, hey, make sure you get this process ASAP. Once we get this transfer form over to you, signed, and get it submitted. So we'll circle back with you here this morning after the webinar. Let's see here. Here's another question from Michael. Once my Fidelity account is established and my rollover from my former employer 401k arrives, can I wire my funds for an investment even though a census has not completed their side of transfer? Yes, you can start investing the funds in that solo 401k. And if you use Fidelity to hold those solo 401k funds for the plan that we offer, you're going to be able to wire any other funds in that brokerage account right away. Let me send over, and that can happen while other funds are being transferred into the plan. Let me send over a link to Fidelity's wire directive so you have it at your fingertips. I'm going to do a search on our website here for Fidelity Wire. Okay, here's the link here. Let me share that with you. So this page here has the procedure and the form that you would submit to Fidelity to have those funds wired for that alternative investment that you're looking to make. So take a look at this page here. I just sent over the link. Okay, let's see here. What other questions? Okay, here's a question here. Could you share the link for the process of purchasing CDs from the Fidelity Roth Solo 401k account? Certainly. So I'm going to do a search. I'll type in CD, Fidelity. Okay, I'm going to send this link to you here. So take a look at that. You can actually invest through Fidelity, through that brokerage account in CDs. They have hundreds of different CDs to choose from. So you can do it right through that self-directed solo 401k brokerage account at Fidelity that you have with us. There's that link. So as you can see here, our search box here at the top is great for searching for information on our website. You just have to enter some of the keywords. We also have our artificial intelligence page there. This one right there, you can ask questions to our artificial intelligence page there. You can get to it by clicking on right here where it says my solo 401k AI. Okay, that takes care of today's questions. We'll be live again today at 1 p.m. Pacific time. Thank you for joining. Have a great morning.